more specifically, I believe 2024 is going to be a catastrophic year because there are so many issues at play, all of which could go curvilinear. You've got Ukraine and Russia, you've got Gaza, you've got Iran and Israel, you've got the greater financial crisis, which is right around the corner. So there's so many things that are dangerous, but at the same time, you've got gold and silver that I believe has broken out and is going to go for the next 10 years. It's going to offer a lot of opportunity.
The U.S. government's persistent borrowing, spending, and unprecedented money creation contribute to creating a monetary Frankenstein's monster. These actions are already causing economic issues, such as slowing economic growth and persistent price inflation. If left unaddressed, these problems could lead to the collapse of the entire system. Bob Moriarty, a former Marine Corps fighter pilot during Vietnam, warns of potential catastrophes in 2024 due to geopolitical tensions and financial crises. Despite this, he sees promise in gold and silver, which have broken out and are poised for significant opportunities in the next decade. Geopolitical unrest in regions like the Middle East and the conflict in Ukraine heighten concerns. Recent events, such as confrontations between Israel and Iran and Hungary's warnings of a potential escalation with Russia, add to the unease. Moriarty notes historical instances where geopolitical events caused temporary spikes in gold and silver prices, but did not sustainably impact them. The shifting power dynamics from the west to the east influence gold prices. Moriarty highlights China's significant role in the gold market, with strong physical demand from Chinese investors and the People's Bank of China contributing to market activity. Economic challenges in China, such as struggles in the property sector and stock market declines, have driven investors toward gold, evidenced by increased trading volumes on exchanges like the Shanghai Gold Exchange. Moriarty underscores the role of sentiment in precious metal prices, suggesting that current pessimism presents an opportunity for investors to buy. Come along as we explore Bob Moriarty's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
I don't think the geopolitical events have much impact at all. When Iran attacked Israel, there was a gold ETF that went up to $3,000 an ounce on Sunday night. And I just went, holy cow, tomorrow is going to be interesting. But even when Israel just attacked Iran, the price of oil was up $3 or $4. The price of gold was up $40 at night, and then it came right back down. The price of oil and the price of gold and silver are certainly sentiment indicators, but I don't think the geopolitical impact has been very much at all. And actually, you should never buy something because you think we're going to go into World War III, because if you're right, it's not going to make any difference. Mm-hmm. But I think we have had years and years and years of sideways movement in gold and silver, and we've broken out. And the sentiment is disastrous, certainly for gold shares, but basically for gold and silver. And every coin dealer in the United States is reporting people are coming in selling their gold and silver. Now, you get that at bottoms. You don't get that at tops. So I think there's more opportunity. I think what we've been talking about for years and years and years is here now. But I think it's sentiment that moves it. However, the main push behind gold, which has just gone up again and again and again and again, is China. And what the Chinese are doing is they're taking control of the gold market for the first time. Literally, and this is something I rarely talk about because I don't want to give all my secrets away. When there's no volume, that's a great time to buy. And when there's a lot of volume and a lot of liquidity, that's a good time to sell. I ignore interest rates. I ignore currencies. I ignore the stock market. I ignore Bitcoin. I don't care. What I'm interested in is sentiment. You don't have to know anything about gold or silver or oil or the S&P or anything to invest in it profitably if you will measure sentiment. And certainly lack of liquidity is a really important indicator. I've been watching that lately, and I'm watching gold go up $40 in a day, and it's some great stock sells 5,000 shares. And I think this is ridiculous. So sentiment is saying we are overdue for a correction. I hope there's a correction because it would make for a healthier market. However, the basic underpinnings of gold and silver are far better than anybody recognizes, and the prices are going to go up a lot higher and a lot longer than the average people understand. Relative to the S&P, commodities are the cheapest they've ever been, and relative to commodities, gold and silver, the cheapest they've ever been, and relative to gold and silver, the resource stocks are the cheapest they've ever been. Now, if you want to make money, all you have to do is invest when things are cheap. And then when they get expensive, sell them. And it is literally that simple. And everybody wants it complicated. Well, yeah, but what about interest rates? What about the US dollar? What about Biden? What about Trump? Well, none of those have anything to do with it. If you will buy cheap and sell dear, and that's sell DEER, you'll make money.
Bob highlights a notable shift in the precious metals market, pointing out that while gold and silver prices have risen, ETF purchases have decreased. The pressing question is whether the tensions between Israel and Iran will ease, temporarily halting the potential for sudden significant flight to quality buying spurred by geopolitical concerns. Despite not being a significant bearish development, the decline in gold and silver ETF holdings is quite substantial. Additionally, the technical picture has shifted in favor of the bear camp, with the overnight spike-up move being firmly rejected. Bob seeks a widget to track Shanghai gold and silver prices, noting their importance for U.S. treasuries and the dollar. Chinese investors drove April's price rally, importing 565.9 tons of gold in Q124, up 34.2% year-over-year, amid a weaker yuan and volatile stock market, prompting interest in alternatives like mini gold bullions. Let's get back to the interview.
I mean, the crazy thing is that with the price of gold and silver going up, where typically the ETFs would be increasing their purchases, they were doing exactly the opposite. And that's a giant sentiment indicator. Now, I'm trying to get somebody to come up with a widget for showing the Shanghai gold and the Shanghai silver price. I can give you the website, and you go to Shanghai and you can scroll through and you can find out where the price of gold is, but the price of gold is in yuan per gram, and then you have to convert that to US dollars per ounce. But there's been this market shift where the Chinese are buying with both hands. And an interesting thing there is that is a negative vote for US treasuries and the US dollars. And if the Chinese sell all their treasuries, interest rates are going to go far higher in the United States, and Americans are just not ready for it, and they're not used to it. Okay, if you do the math and the difference between a 2% mortgage and a 7% mortgage, you realize that when you've got a 7% mortgage, and at base, I'm 77, a 7% mortgage was a cheap mortgage. It was a good mortgage, okay? You talk 10, 11, 12%, those are expensive mortgages, but you end up paying far more in interest than you pay for the house. And of course, the real estate market hasn't come to grips with it. I had a piece of paper someplace. Let me see if I can find it. I saw something that I wanted to bring up with you. Probably can't find it now. I found it today, and there was a AT&T building that sold for $3.5 million, down from
in St. Louis.
Yeah.
In 2006, I believe it sold for something like $200 million or $300 million, and it just sold the other day for $3 million.
$3.5 million. Yeah. It had a 98.5% decline. And what everybody would like you to believe is that's some kind of anomaly. And I don't think it's an anomaly at all. I think that commercial real estate is an accident waiting to happen. I think it's going to be far worse in 2008. And of course, I happen to be a nervous Nelly, but I think being a nervous Nelly today is a very sober, sane approach. Mm-hmm. But when real estate's going down, commercial real estate's down 98%, you got a problem.
Gold prices have rebounded in the first half of Monday's session following last week's decline, driven by investor reactions to the recent strength of the U.S. dollar and reduced expectations for Federal Reserve rate cuts amid evidence of persistent inflation. Traders, in reality, were seeking any reason to secure some profit. However, with the recent consolidation and slight pullback in gold prices, could we see a renewed rally this week? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.